to Inside Personal Growth Podcast. Deep dive with us as we unlock the secrets to personal development, empowering you to thrive. Here, growth isn't just a goal, it's a journey. Tune in, transform, and take your life to the next level by listening to just one of our podcasts. Well, welcome back to Inside Personal Growth. This is Greg Voisen, the host of Inside Personal Growth. Dave, it's good having you on the show. My listeners know me, but they don't know you. It's Dave Wolcott, and his book is called The Holistic Wealth Strategy, a framework for building legacy wealth and unlimited freedom to live an extraordinary life. Hey, Dave, thanks for joining us.
Hey, Greg, really grateful to be here to connect with you and your audience.
Well, I appreciate you taking this time. I know that is the biggest commodity we all have is our time. And we will reach people I know who are going to want to learn more about you, but I'm going to do a brief introduction. Dave Wolcott was a former Marine Corps captain, serial entrepreneur, and founder and CEO of Pantheon Investments. And the website is pantheoninvest.com. And there'll be a link right below here. People, look below on the YouTube video when you're watching this on YouTube. He dedicated his career to challenging the status quo of Wall Street, driven by his own journey after winning what he called the baby lottery and having triplets. He quickly realized the conventional path to wealth wasn't enough. And Dave is basically here to discuss his new book, and he's actually going to give away a copy to everyone who's listening. There'll be a free download link that we will have. Again, look in the show notes below here on the YouTube video, and you'll be getting a free copy of The Holistic Wealth Strategy, a framework for building legacy wealth and unlimited freedom to live an extraordinary life. Today, we're going to be diving into how listeners, you out there in the audience, can take back control of your wealth, leverage alternative investments like real estate syndications, and develop the mindset needed to achieve true financial freedom, and not just a number for retirement. Well, thanks for bringing this perspective because I think it's needed. I have a very good friend, Bo Parfait, who's a partner at DLP Capital, which is in Florida as well. And that company seeks to do kind of the same thing with individuals. And I've worked with family offices most of my life personally as well. So I understand the way in which you're coming. Not all money needs to be made through stock investments through Wall Street. So it's an honor to have you on the show to talk about your book. You said you dedicated the book to your wife and children. Knowing that much of your family was inspiring your journey, how did they influence the way you shape, the way you think, and about building your wealth and your legacy?
Yeah, I think I'll just probably back up a little bit, Greg, really to give the audience a little bit of context, right, to how
Okay.
I kind of got here, which actually starts with my family, right? And I was actually raised in a middle-class family in Connecticut. And I was taught that the recipe for success was go to school, get good grades, you're going to get a job, and life would just work out, right?
Right.
So I kind of followed down that path. We didn't come from a lot of money. No one talked about money. And in fact, money was actually kind of taboo to talk about at the dinner table. But I followed down that path, had the opportunity to go to school and then do the ROTC program and serve my country afterwards in the Marine Corps. And I learned some amazing things in the Marine Corps, things that they just don't really teach you anywhere else in the world, such as leadership, teamwork, and integrity. And then shortly after the Marines, I transitioned into corporate America, got into the tech industry. And, I really got quickly frustrated, Greg, with just kind of the corporate bureaucracy and how things worked, really the entire system, and losing that sense of purpose and mission that really drove me in the Marines. And then at the same time, my wife and I started raising a family. We actually had an 18-month-old toddler kind of ruling the roost. We were trying to figure that out. And then on October 24th, 2000, as you mentioned, we actually hit the baby lottery and had triplets and literally quadrupled the size of our family overnight. And I
Mhm.
can tell you, Greg, as a father holding 3 babies in my arms at the same time was just I was completely awestruck. And the paternal instinct in me was just thinking, "How am I going to provide for my family?" Right?
How am I gonna do this?
How am I gonna do this? They're saying it's $1 million to raise a child. I mean, I'm 26 years old at the time. I thought about maybe, retiring, and I wanted to live a big life as well. I had big goals and dreams too. And so I went to see my financial advisor, and he told me to max out my 401k, and I can invest in things called 529 plans for the kids.
Mhm.
And I started running out the math and saying, okay, a 7%, compounding projection over the next 30 years. And I wasn't moving the needle. So it was right then, Greg, that I figured out I was not going to build real wealth as a retail investor in the stock market. And so this launched me on this obsessive journey to figure out how the top 1%, the top 0.01% were really building wealth. So I started investing in all kinds of different private assets, everything from single family real estate to office parks to retail real estate to raw land and real estate. I started investing in oil and gas. And keep in mind, this is back in 2000 when there weren't great shows like this and a lot, not really good resources. So I was just kind of working through relationships and then started to take action, do these investments. And then fast forward 20 years, I built up an amazing portfolio. And I really just wanted to share this with other people so that they could really break free from that conventional thinking and thinking that they had to put everything into Wall Street and really outsize their wealth and live the life of their dreams.
It's a great story, and, one of the challenges that young people face today, and a lot of them are getting married older, is being able to afford real estate, being able to afford, to buy a home, okay? What would you tell somebody who was, like, in your shoes back in 2000? Now we're in 2025, so 25 years later. Um about, we've seen such inflation. I don't care if it's Florida, California, where I am, or other places, and increases in prices in real estate. How would you advise them to get there? To get enough money for the down payment, to buy into real estate so they could have a stake in owning their own home?
Yeah, great question, Greg. And before we really get into the tactics of all of this, right? I think what's really critically important, and it took me, over 2 decades to really figure this out, which is why I'm so passionate about trying to help other people, is that I believe that the true definition of wealth is not about the size of your bank account, right? And we believe in holistic wealth, which encompasses multiple different dimensions. Okay. So we obviously think about financial capital in terms of wealth, but there's also intellectual capital, right? There's physical capital, there is spiritual capital, there's emotional capital, right? And all of these different forms of capital go into creating what's truly holistic wealth. So, to answer your question, where someone could start is investing in yourself first. The first
Okay.
investment you should be making and consistently making is in yourself. And whether that's in your health or your education, you're investing your time today and listening to this or watching this on YouTube, which is fantastic. But you can increase your financial IQ and might realize that you don't even need capital to invest and potentially 10x your net worth, right? You could figure out that there's ways to create capital using other people's money, or for instance, you might find a way that you can actually reduce your taxes and in fact pay nothing in taxes if you invest strategically, understanding, how the tax code actually works. So that's focusing on your intellectual capital and getting smarter, right? Increasing your financial IQ and what's even possible. So I think that is really the best place to start, wherever you are on the journey, is always looking at yourself on your balance sheet as the greatest asset.
Yeah, I think that's important for people to refocus and realize that. Now, in your book, you kind of describe the Wall Street taxes, government qualified plans, which you just talked about, 529 plans, those kind of things, as the three wealth disruptors. Um, so, for those new to your work, which your work and your book, and by the way, he's got a podcast too, so you can go to his website, Pantheon Invest, and you can see the podcast listed there as well. Um, can you explain why these are such dangerous traps for investors?
Yeah, it's interesting, Greg, right? I started out really just trying to start to ask questions, right? Why? Why does it make sense to defer taxes until later years? People say, go in the 401k, defer my taxes. And, the only thing I'm probably certain of in the future is that taxes will likely go up. So
Mhm.
if I just keep kicking the can down the road, I'm going to be paying more on taxes in the future. And also, if you pay taxes on the seed rather than the harvest, you're going to pay a lot less, right? So I started asking questions such as this, or looking at fees and inflation, right? Everyone is really understanding inflation, but when you start to look at that over a 30-year projection, that significantly erodes capital. And one of the other interesting areas that, people just, I think aren't really, fully comprehending is that if you are 100% invested in stocks, bonds, mutual funds, totally correlated to the market, you have this over concentration risk. So if the market goes down by 50%, you keep your value of your entire portfolio keeps going up, and you're like, hey, I did great. We were up 18%. We were up 15%, right? It's gone up, it's gone up. But you have that 1 year where it comes down 50%. The next year, you have to go up 100%
Oh, yeah.
just to get back up to where you are, right? So I think advisors sometimes aren't really talking to clients about that, right? And that is a significant disruptor. And then when you look at the cost of taxes, fees, and inflation, over a career, they significantly erode wealth. And now let me give you an example that's really clear so people can understand the difference between what I'm kind of suggesting, which is what I've seen high net worth, ultra high net worth investors, family offices do really for decades really well. So in the traditional scenario, they focus on what's called accumulation theory, which is building this nest egg towards retirement. So let's say you did a great job and invested your whole career and you saved 4 million, right, in your retirement accounts. Now they will have you run through this Monte Carlo simulation and say that you're going to withdraw 4%. It's even less than that today, but let's just go with 4% conservatively. So now you have an income at 65 of 160K, but let's take out taxes and fees and inflation from that. And you're probably more like 110K that you're actually netting on. So you've basically invested 4 million over your career and you're living on 110K. Now, let me compare this to scenario two, which is someone who's investing strategically into real estate, private assets that have what I call a trifecta type of return, which is you have tax efficiency, you have passive income, and then you also have forced appreciation growth. So let's take that same 4 million and let's say, again, it's in private assets, real estate that's tax efficient. So your 4 million can generate very realistically an 8% yield, which would actually double what you're making. So that's 320K of income. You are also growing, basically the appreciation is going up, likely about 10% a year. So your nest egg actually keeps scaling, which means that your income keeps growing, and then you actually can create generational wealth from that. So which scenario would you rather be in?
Well, that's an important point you make, but and not to be a contrarian here, but as people put money into real estate, they obviously are hoping for appreciation. It's not always a guarantee, just like Wall Street. Um, they also usually, if it's like limited partnerships, are going to get a K1 that they're going to have to pay tax again. Would that be correct? I mean,
No,
usually
well,
that is the
that's the
case.
magic. I mean, but with bonus depreciation, right, you're able to offset the income through bonus depreciation. So as you keep buying assets, you can basically make all of that income offset, right? And then when I say appreciation, be clear, this is not appreciation where you're hoping the asset goes up in value. This is forced appreciation in commercial real estate, where you can do things like in an apartment building, for instance, you build a pet park, and now you can charge another $100 a month in rent times 300 units and increase your net operating income, right? So
Well, and I believe I would go concur with you 100% on all of this, Dave, in that, the family offices where huge amounts of income are made, whether it's apartments or it's single family homes or it's flipping homes or whatever it is, that's where most and if you're trying to say look at different models versus Wall Street, and that's one of them, you're going to find that those offices generate huge amounts of income from rents, right? A given, and then maybe they trade up the property. So they do a 1035 exchange or whatever they do. The point is that you can defer all the taxes and you can generate yourself a lot of income. Would you agree? From
absolutely.
rents? Yeah. Yeah. So I think that's where people are really looking to say, hey, look, Wall Street is maybe giving me an average rate of return of X, but most people are leaving it in a retirement plan, as you said, thinking that later on down the road they're going to be in a lower tax bracket. That hardly ever occurs. They're usually in a higher tax bracket. And you mentioned earlier in the show, you know of only one thing, that the taxes are going to be more. And I would agree with you on that. Now, one of the themes of your book, and I think this is important, you mentioned it, were these four freedoms: money, purpose, time, and relationship. So, which of these freedoms was the hardest for you personally to achieve and why?
Yeah, great question. I'd like to just frame that, I think, for the audience, right, first, which is that understanding, everyone talks about financial freedom, and you see the picture on the beach, right, with a couple and a margarita, and life is just, really magical. But I would propose that there's this deeper level of thinking. If I was to give you $1 billion today, Greg, and then ask you, how would this significantly change your life? You know, what would you be doing? Where would you be? Who would you be with? I really encourage people to do some deep thinking on how they would really change their life, right? Because I think
Hmm.
we too often think that financial freedom is the answer for everything. But in fact, if your life is not working out, it's actually only going to accelerate some of those challenges. If it's doing well, it's going to amplify those things. So once you actually have freedom of money, you can also have these other dimensions of freedom, which I believe are what compel and drive all of us, which is freedom of purpose, being able to wake up every day and be fascinated and motivated about the work that you do. Freedom of a relationship. I get to spend my day having a great conversation with someone like-minded like you, versus being in a job and working for, someone, or at a job that I just don't care for, the people, the approach, right? People have a fixed mindset. Or, let's talk about freedom of time, right? I was able to spend time to be able to work out this morning, have my morning routine, and meditate and do and be healthy, and the things that are really important and that drive me, versus spending an hour and a half trying to commute somewhere. right, to a job. So I think these freedoms are really, I think truly essential. And probably to answer your question, the most challenging one was really getting to that freedom of purpose,
Mm.
and truly having that purpose where I really know totally what my talents are and how I can double down on these, and then how I can really create greater impact in the world by being, in my unique ability, right? As Dan Sullivan likes to call it, which I think is a great it's a great journey. And my kids are in their 20s; they're trying to figure this out. I think a lot of people spend their whole careers trying to figure out, what is your purpose. But when you can actually do the most work on yourself and understand self awareness and figure out, where is there flow in my life? Where do I have no friction, right? What are my skills? Where can I create the most amount of value? And when you can truly harness this, and put it to work in an area of value creation, this is creating purpose in your life. And so for me, this is not work to me, right? This is,
Right.
I'm truly inspired and motivated by, what I'm doing.
Well, you spoke about mindset a second ago, and Carol Dweck, the fixed mindset versus the goal growth mindset. Probably one of the best books around. I know Guy Kawasaki was on here speaking about it on my show not that long ago. Huge advocate. Um, you know, i- you've had that mindset has to come first before investment strategy, and I would agree with you. Um, could you share with the listeners an example from your own life when you had a shift in the mindset that changed the entire course of your wealth journey? Because I know you told the story like, hey, I was doing this and I finally woke up and said I didn't want to do that. But what precipitated that? In other words, just dissatisfaction. You weren't having fun anymore and you decided you needed to take the risk. A lot of people with a fixed mindset that are listening, um, it's really hard for them to take the risk. They look at their comfort zone and they can't expand that comfort zone out there. What did you do to actually be able to shift your mindset and take what I would consider to be, and most people listening, probably bigger risks?
Yeah, I think the biggest, m m h way that I moved the needle there was investing in coaching, for myself, right? And as Jim Rohn always says, that you are a product of the 5 people that you spend most of your time with, right? So who are you spending time with? And I think most of us, have legacy relationships, maybe people we grew up with or even family members, right? When you talk about, "Hey, I want to invest in this piece of real estate," and what happens? I even have family members that tell me, "Hey, that's too risky. My financial advisor says that's a bad idea." But then I asked them, I said, "Well, how does your financial advisor get compensated?" He gets compensated based on assets under management in the
Right.
stock market, right? So they're not able to give you an appropriate insight in terms of, that real estate asset, right? So when you're able to surround yourself with people that are above your level or 10x above your level,
Mhm.
it's very amazing. It's like, just think about if you're a tennis player, right? What's the best way to improve your game? You want to play with people that are way above you. If you're playing with people worse than you, you're going to slack off and play at their level. So this plan is not for everyone, Greg, right? But people who aspire more, who are ambitious and want to really break free of some of these systems. I think Wall Street is actually a system. The government is a system, which works and it has its place for certain things. And for certain people, it might be great, right? But other people who want to, again, create bigger impact, think differently, do things differently, you've got to take action, right? And the way to take action is to be exposed to new environments, new ideas, new people, right? That can change how you think.
Well, along that line, let me ask you a question. The FINRA money system, the devaluation of the dollar, is a big issue right now. We're seeing that. You see many investors flooding into Bitcoin. Now, Bitcoin's another investment. Now, people who held on to it, I think it was $122,000 a coin just a few days ago,
Hit 125 last
or
night.
125, whatever.
Right.
My point is that there's one of those alternative investments that I'd love to get kind of your take on, given our FINRA money system. You're talking about a system. That's a huge system. It's a system that people have relied on. They've always used the dollar as the de facto. Who knows how much longer the dollar is going to be used as the de facto currency. What are your thoughts on that?
So great question, Greg. So the way we look at the devaluation of fiat currency around the world, frankly, is to be invested in real assets, right? And this is one more reason don't want all of my assets exposed to the market, right? Because you have that over concentration risk and that volatility, right? When you can invest in real assets. So for instance, one of the opportunities we did earlier this year was medical office buildings,
Hmm.
right? The doctors signed 10-year leases, right? And in something that even during a pandemic or whatever, people still need services. They need to go see their doctor. They need to go see their dentist and things like that. So when you can invest in those types of assets that will drive forced appreciation and appreciation in real assets over time, that is going to be a nice hedge against devaluation of the dollar, right? So I think that's very strong. In terms of, the crypto markets, I believe that crypto is still somewhat speculative, and it really depends upon your viewpoint, right? If you see it as digital gold, and there is a flock to safety to that, right? You could allocate some percentage of your portfolio to that. That's how I do that. Um, if you're an active trader, then you're moving crypto a lot, and it's really should be on the top of your risk curve, and you should allocate a smaller amount to that. But there's still, you talk to Michael Saylor, and it's going to go north of a million or more, or a couple million. But
Hmm.
there's other people who say the whole thing could still blow up, despite the fact that institutions are getting into it and everything. So there's always two sides to the coin of an
Yeah.
investment. But again, I like to focus on real assets. So think about commercial real estate. Think about things like even oil and gas is a phenomenal investment. All the demand on energy with AI today, there will not be a shortage of energy anytime soon. So what this creates, again, from a trifecta standpoint, is you get that tax efficiency, you get income today, not at 65, but today, and the asset has that forced appreciation growth in it as well, which is a good hedge against inflation. So when I can win three ways or protect my downside three ways, those are the assets that we're favorable to.
Well, I think many people can relate to uh, a kind of a Warren Buffett strategy. Now, Warren Buffett obviously has invested a lot in the market, and you've tried to pull people away from what you call the Wall Street casino. But in his case, everything that his company has invested into has been what I would call like um, stable companies, right? Heinz, ketchup, something that's a commodity that's used over and over, paper products, stuff that people need. And I think that was a great philosophy for him when he did it, and it paid off, obviously, right? One of the richest men around. What's one client story that stands out to you as a powerful example of transformation through what you call holistic wealth strategies?
Well, one of our clients has been with us for probably 5 years now. When I first met him and started to talking about this, he had all of his assets in the market. He was trying to pay off his house. He was a successful business owner. He was probably paying about 50% in taxes, or north of 45%. And, since then, in the past 3 years, he's literally undergone a transformation. He's been able to reduce his tax liability down to zero through investing in assets such as real estate, putting together a comprehensive tax strategy and a strategic tax plan, not just
Mhm.
deductions, but a tax plan. He's created diversified streams of income through different asset classes that are all non-correlated to the stock market. And he's reduced his exposure to the market significantly and only has about 30% exposure right now, including avoiding the dip in 2022 that happened. He missed all of that. And he's also, I think the biggest thing, Greg, is he just feels so much more confident because of the clarity he's created in
Right.
his overall wealth plan. And he feels very secure with his family in terms of if anything were to happen to him and where their income is, and now he's having fun, right? Doing what he does best in his business, creating value for his clients. And, it was a true transformation.
Well, it's a great story because I think one of the ways you transformed him is to look at an alternative investment that ultimately reduced his tax bracket, which created more wealth in his life just from the fact that he didn't have to pay as much in taxes. Now, you said that wealth is like oxygen. It's essential, but it shouldn't be the goal itself. Um, how did that realization shape the way that you live and the choices you've made for your family? Because one of the things in these 4 principles, and one of them you said was purpose. And I think in most cases, it's around, you know, um, creating significance, making a change. What are my, as I'm going to call it, spiritual beliefs? What am I giving to? What's my legacy? Where am I leaving this money? Granted, we have children, but at some point, you make enough wealth, it's more than enough for children. Some people make that kind of money, right? So there's got to be something beyond yourself that you're trying to benefit, whatever your cause is or your point. I know in my case, I have a nonprofit called Compassionate Communications. We help the homeless, and the authors help me do that. So, my question to you is, how do you address that with individuals? And how do you help them reshape the way they create legacy for themselves and family?
I would tie this back to those multiple dimensions of capital, right? There were so many times in my life where I didn't necessarily have the financial capital to go invest in that next opportunity. But what did I do? I spent time like this, like reading books, right? Getting smarter and working on my intellectual capital. There was also times where I could have made more money. I sacrificed more money because I actually spent time on my health and my physical capital. Because, look at Steve Jobs, right? He had all the money in the world, but he couldn't buy himself another day,
Right.
right? So I actually invest in my health every day because then I can bring 10x more energy to my relationships, to my purpose, to my work, and the things that I'm trying to contribute to. So I focus on those all the time at actually, the expense of creating more financial capital because I know more money can always be made. And that is energy. And again, energy, thinking about financial capital, again, if you are on the right path, you're on the right purpose, that can really amplify your impact and your results that you're having, either in a positive way or a negative way. And take a look at, as an example, a lot of, top athletes in the world or even lottery winners, right? Who have obtained that, one liquidity event. And then a year later, they're actually worse off where they were because they didn't have intellectual capital, right, to figure out how this actually works. They couldn't manage it. They didn't have emotional capital because it just created more problems in their families and relationships and people kind of fighting over money then. So I think, again, you want to have this 360-degree view of your wealth and encompasses all these things. And as you look back over your life, what is going to be most significant? What is going to be most important? No one's going to care about the size of your bank account. And
Right.
interestingly enough, Greg, the more you focus on these other dimensions of capital, financial capital just shows up at the door.
It's a great point, and I would say, again, in leaving this legacy, whether you're leaving money to charity or leaving money to your children or both, it's important to keep in mind all these other forms of capital, because if you don't have the time required to create this, which we just said, time is a valuable resource. Um, you, like you've said, you were in positions yourself where you couldn't afford to make the investment, but you invested another way, you invested in yourself. So, one of the things that many of these listeners out there, because you are helping people look at alternative investments, and I'm encourage everyone to go listen to the Wealth Strategy Secrets that you have of the Ultra Wealthy podcast. That's your podcast. They can go find you on Spotify and iTunes and all those places. Go look for that. But if somebody's feeling stuck with their 401k or traditional retirement plans, or for somebody listening who wants to start shifting toward your strategy, what's the first practical step that they should take today? People are going to say, well, Dave, I believe in what you're saying, but the reality is, if I have to take money out of that 401k plan, I'm going to pay taxes. And then I got to go invest in what you've got. And that's the only money I have. So are you going to say, hey, maybe what you ought to do is cut back on what you're putting in the 401k plan and start putting in alternative investments? Or what advice would you give them?
Yeah, so great question, Greg. And that really ties directly to phase 4 of the holistic wealth strategy, which is what I call asset repositioning. So it's taking a look at your existing portfolio and trying to identify how can we drive towards asymmetric investments, meaning we can increase your yield and reduce your risk at the same time. So one very easy way to do that is with setting up a self-directed IRA. You can actually apportion a certain amount of your 401k or your IRA into a self-directed IRA, and from there you can actually invest into real estate, crypto, some of these other alternative type assets, and you can do it in a very conservative way to kind of dip your toes in, see how that investment performs, and therefore you kind of de-risk yourself by being non-correlated, see how the investment goes, and then you can continue to invest from there. So that's a really good way, is to get off the ground.
It is a good way, and I'd highly advocate the listeners who are listening, the self-directed IRA would be a great way, as he's saying, because there are restricted investments in a self-directed IRA, and you just have to realize that. But the real estate that he's talking about is not restricted. As long as it's approved by the self-directed IRA, you can make the investment. You're not going to be able to go out and buy your Rolex watch and put it in your self-directed IRA, but you can make investments into the real estate that he's speaking of or other alternative investments. Now, Dave, looking back, what would you tell the younger self who's working hard, saving diligently, but feeling like he or she uh, was just keeping their head above water financially? They weren't actually making, and believe me, I understand this. I have a son right now that's going through this. He's working really hard as a brand new baby, just like you did with the triplets. He's feeling really, really challenged. Okay. Um, in spite of the fact that needed some financial assistance. And I see this happening more and more with struggling young people today. What would you tell them, based on your history and the trajectory you took and the journey you've taken to get where you are?
I would say to really focus on investing in yourself as the greatest asset. And again, intellectual capital, relationship capital, you could literally be one relationship away from your biggest opportunity of your life and not
Hmm.
even know it, right? But if you're always focused on chasing the dollar, it will actually become even more elusive for you. So you want to be focusing on really, what is creating those freedoms that we talked about? What creates more freedom in your life? How can you drive more purpose? And then thinking about, from a self-awareness perspective, right? Where do I create the most value and how can I be most aligned to that? And when you can remove the friction, right, and the resistance that's out there, it's amazing how much that opportunities start to show up. Financial capital just starts to show up in your life. But too many times we're in this culture of grinding, right? It's all about outworking somebody, keep grinding, doing more and more. And I was there. I mean, I get it. I spent decades really doing that until, finally I learned all of these things and I started to continually invest in these different dimensions of capital. And then I started to, think in terms of abundance and where opportunities would show up in my life and serving other people first, just like you are with your charity. How can you, increase your gratitude and how can you do more for others? And it's amazing how things just kind of come back to you in spades, right? And you have to trust that they will come back versus grinding, 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 and chasing something.
There's always been a famous statement, and it wasn't Napoleon Hill, but I don't know who to give this credit to. You are the books you read, you are the podcasts you listen to, you are the people that you hang around, and I'm going to add to that, and you are the affirmations that you put into your subconscious to actually reprogram the subconscious to really be willing to open and accept because it if you don't work on it, it basically can work against you. And I'm not certain that everybody listening knows how important that is. And I would say to everyone listening, whether it's an affirmation you state, or it's a hypnotherapist you go to, or whatever it is that you do to reprogram, please, 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 because I've had so many very big thought leaders who have advocated this for individuals. And as soon as the subconscious shifted, the manifestation of the things in their lives shifted as well. And I think a lot of what you've talked about is that manifestation. Now, you often said that your mission is to help people create a future that's always bigger than their past. Um, what's the next big vision driving you forward, both personally and professionally? And what's next for Pantheon Investments?
The thing I'm most excited about, Greg, is that we are bringing to market a software product called Pantheon Wealth OS that will be launching later on this year, which is essentially a dashboard for you
Mhm.
to track and manage your wealth. Because I struggled, I've got 83 different spreadsheets for all my different assets, and looking at how do you project, 13 different income streams across different asset classes outside of just stocks, bonds, mutual funds, but you want to track your real estate, all your other things, or doing strategic portfolio allocation like we talked about. If you believe, you're a gold bug, maybe you want, 10% in metals and you want to have 10% in crypto and 30% in stocks. Well, where am I today? How do I get there in the future? Right. So it's really trying to get insight into your financial picture today, then using AI analytics on top of it to be able to project and hit your goals and really collapse time to get there in half of the amount of time.
So that's coming up. When do you expect to release that? And when you talked about the AI, basically you first mentioned a half an hour ago, the Monte Carlo method. Well, you don't need Monte Carlo anymore with AI. You just need to feed in the right things. Will the software, and I think this would be great for my listeners to know, have the ability to pull from resources? So let's say they're with Charles Schwab, they've got real estate, they want to put all these in here and track it and then run the AI model that forecasts that. Is that really kind of what the
Yes.
software is going to do?
Yes,
Okay.
completely. In
So you have a
addition,
new customer right here in me. I'm going to endorse it before it comes out because when you look at the ones the stockbrokers have, they're really kind of proprietary to what they want, whereas yours is independent. It's free. It's like, hey, I don't say the software is free. I'm saying it's for the free thinker who's saying, I have this investment, I have this, I have that. I want to forecast. I want to see where I'm going. I want to see where income's coming from. And they can put it in here and then run a model in AI and it's going to forecast for them. That's quite a valuable piece of software.
Yeah, correct. If you go to pantheonwealthos.com, we're actually giving away the first 100 seats free for a period of time.
Yeah.
So people can check that out as well if there's some interest.
Can I go there and do that after I
Yep,
hang up?
absolutely.
Okay.
OS.
PantheonWealthOS.com.
That's it.
Okay. Because what'll happen is when the show airs, you might get a lot more than 100. So, all right. Well, Dave, it's been a pleasure having you on, speaking about your book. I appreciate your time today. The book is called The Holistic Wealth Strategy. And for all my readers, again, for all my listeners, click below. There's a link to get a free copy of this book. Go to Dave's website, listen to his podcast. I highly advocate that because it's going to give you a different perspective. And I think if there's anything we've done today well, both Dave and I in this podcast, is open up the door to a different perspective. And that's what you're looking to do with looking into Pantheon investments. And Dave, any last words, Dave?
No, just wanted to thank you for the opportunity, Greg. Really appreciate it, and thank the audience for listening in, and hopefully this was helpful. And again, if you wanted a free copy of the book as well, just go to that holisticwealthstrategy.com.
We will put the link to that most certainly. Thanks for being on. Appreciate your time.
Appreciate you.